Hello traders, in this video I'm going to show you how to use the custom scanner to find excellent bullish put spreads. So this would also be known as a put credit spread, and we're looking for the stock to stay flat or move higher, and this strategy takes advantage of time decay. I'm not going to go into the strategy so much, I just want to show you how to find really good candidates. So I'm going to click on custom search. And in the custom search, since I am looking for option trades, I'm going to click option liquidity. And I'm going to enter a value of 2 so that I know that that stock has pretty decent option liquidity. And I'm also going to click weekly options. Now this is something that I do all the time. If I just use this search, these are all stocks that have very, very liquid options. So the next thing that I want to do is I want to find stocks that have sold off dramatically in some cases and are near major horizontal support. Those make fantastic candidates. I'd mentioned in my prior videos that I oftentimes use this bullish climax to look for call credit spreads, bearish call spreads, and I like using this bearish climax long term. That means that there is so much pressure and so much weight on this stock, pushing it down and pushing it down. I'm looking for a reversal because once that pressure is alleviated, that stock is going to release and move higher. So if it's on major support, then it's been able to tread water even though it's got this monkey on its back. So I'm looking for a bearish climax long term. Now it would also be nice to find a stock that is at the lower end of its 60-day range. So let's say that the stock is somewhere between, well, it could be 1%. I'll take something that's right on the low, and perhaps let's say 30%. So it's kind of in the lower quartile right now. We'll run a scan, we'll take a look, and we can see that we've got 4 possible candidates here. So I'm going to move the custom search off the screen so that we can take a look at each one, and let's see if there are any opportunities. So currently we've got DVN, that's an oil stock, and we can overlay the longer term moving averages. Because this stock is down near its low, we're not going to put the moving averages up because it's going to be at the low end of it. Let's also see if the stock has relative strength. So we'll click on 1OSI. You can see it's right around the 0 mark, so it's been relatively strong compared to the SPY. And then we're also going to put up my pressure indicator. And here we can see that, yes, there's been some very, very heavy selling pressure built up, but the stock has been able to tread water. So this is a good sign. The fact that the stock has not gone down, it's on a buy signal, it's been decent relative to the market, and it has this pressure coming up, sets up well for a bullish put spread. So the way that I would approach it is I'd take a look in this particular case and I'd say, okay, well, $30 was that low in here. If I can key around the $30 price level, then I know I have horizontal support to protect the position. So I would come up to option pricing and I would look. We can go into a monthly option. We could select from any strike that we want. If we wanted to use weekly options, we know that it has weekly options because that was one of our filters. So if I sold the 30, 29.50 off screen here, it's 7 cents. But I can probably work this order and I might be able to squeeze a dime out of it. I would like to squeeze a dime out of this. And if you look at how bullish put spreads work, you have to put up the difference in the strike prices, which is 50 cents. If I take in a dime, I only have to put up 40 cents. If this spread expires worthless, I make a dime, but I only had to put up 40 cents. That's a 25% rate of return in a 2-week period of time, and I have major horizontal support that I'm leaning on. I have a stock that's doing pretty well relative to the market. It's been able to hold its own even though the market has gone down. Let's do a SPY overlay. You can see how the SPY has sold off dramatically, but the stock has actually held up pretty well. I also know that I have all this weight on the stock, yet it's been able to tread water. We've got that major support level right there. So that would be an attractive candidate. This is the process that I go through. Let's look at another one. KR, really big drop right in here. Might need a little bit more time to form a base in this level. You can see it's weak relative to the market. There's heavy pressure on it, so that would not be my first pick. Here we've got another energy company, Occidental Petroleum. Not bad, down on its low. Would like to see a little bit better out of the relative strength. Here we have another one. That's really nice horizontal support right in there. It's been okay relative to the market. Heavy pressure on it. And you've got another support level right here. Let's see if we've got a major moving average. And we don't. But let's change the search a little bit. So this might not be a bad candidate, but you would want to try and go down to the 62 horizontal support in here, maybe even 61.50 if you could, but you're not going to get much of a credit with the stock 3.5 points out of the money. So let's vary this search just a little bit and see if we can come up with something different. Perhaps this percent 60-day range was not the best criteria that we could select. So again, we're looking for that long-term pressure on the stock. Maybe we want to find a stock that is currently in a compression. That would be good. And we'll do that on a daily basis since we're looking for a longer-term position. Probably sell this put spread and have it on for a week or two. And then let's also see if we can find a stock that's above the 100-day moving average. So we know we should be able to lean on that support level if it's anywhere close. And let's see what this yields. Hey, we've got a number of stocks that actually come up. So I'm going to go through each one of these and we'll take a look and see if there's an opportunity. These compressions are really good because they signal that the stock is coiling. And I'm going to put the 1.0 squeeze indicator up. Yellow dot equals compression. There's our pressure on the stock. We can see strength relative to the market. And hey, look at this. We've got a 100-day moving average that we can lean on. So let's recap. I have market strength that I can take advantage of. I have all this pressure that's been building, selling pressure that's been building on the stock, yet the stock has been able to tread water. That's good. It's in a compression, so I know I should have some horizontal support that I can lean on. And yes, I'm absolutely going to lean on that 100-day moving average. Go into option pricing, and now I can take a look at the options and decide what kind of credit I want to get for that particular spread. Take a look at another one. JPM was another one on the list. STX is another one. This stock is going to go higher. The market's been down, but the stock's been compressing at the high, and it's had this negative pressure, very strong relative to the market. So in this case, I would actually be an option buyer, and my tactic here would be to click GTC and to drop that line right above the current resistance level. And if that stock breaks through that resistance, I'm going to be a call buyer. I could sell a bullish put spread also. Let me go into another search that's really nice. And this has more to do with earnings. So I'm going to unmark the 100-day moving average, and I'm going to use another feature that I had shown in one of the other videos. Pre-earnings bull. There is a pre-earnings bear as well. 2 weeks ahead of earnings, this stock rallies 75% of the time. So what I want to find is, since I'm going to be selling a bullish put spread, I want to find a stock that announces 2 weeks from now, because it should be rallying for the next 2 weeks and that bullish put spread should expire. So I'm going to click my earnings date projected, and I'm going to select from the calendar something that's a couple weeks out. So let's go to the 2nd of April, and let's go to maybe the end of that week. So the 6th of April, and because I have pre-earnings bull marked, I know that these stocks that come up are going to have a tendency to rally. Didn't get any search results, so I'm going to have to, because that's before the next earnings season. So let's raise this a little bit. We can raise our date to, let's go out to the 13th, and maybe we can go to, since we know that April 2nd was in that range, maybe we can go the 9th to the 13th, and now we'll see what comes up. And I'm going to unmark the option liquidity. If it's got weekly options, let's see if that helps. We've got one candidate right now, and it's because we're just before earnings season. I'm going to expand it just by a few more days, and I'm sure I'll start picking up a lot more results. So let's go to the 17th. When earnings season cranks up, there we go. There are a lot more to pick from now. So I know that I have to pick a spread that expires before April 9th. And let's take a look at some of these results. So I'm going to click through each one of these and see if there's a nice bullish put spread that we can be putting on right now. You've got Goldman Sachs kind of chopping around. You've got horizontal support at this 256 level, and you have that major MA. You've got the pressure is pretty neutral to favoring maybe a little bullish. It's been okay relative to the market. I'm not jumping up and down on this one, but there could be a trade in there. We've got JPM, decent strength relative to the market in a compression. There's pressure, downward pressure on this stock, but it's been able to tread water. This stock is probably going to move higher, and I do have a trend line that I can lean on as well. So I've got my trend line right there. So we'd like to see that actually stay intact. So I could look to key off of that 114 level, or I might want to give myself a little bit of breathing room and sell the 112, 111 bullish put spread. And this 100-day moving average should also help. And there you've got a 50-day moving average coming in as well. All of the technical studies that I use very, very often are all toggle on, toggle off. Try and make it very, very easy, very user friendly. So JPM might be a good one. LRCX, kind of up near the upper end of its range. I like this horizontal breakout right here, but I don't like that the stock poked below it. So I wouldn't want to sell anything until it can get back above that horizontal resistance level right there. And then I would probably key off of that level, expecting the stock to rally. Netflix is another stock that came up in the search. You could see it's breaking below this horizontal support level right here. So I wouldn't feel real comfortable selling a bullish put spread on a stock that's run up so much. But mind you, there aren't a lot of results that came in because we are pre-earnings season right now. Charles Schwab, you've got this horizontal support level, used to be resistance, had a little bit of a breakout. Nice strength relative to the market. Pressure that should be pushing the stock down, but it's not. It's been able to tread water right around this horizontal support level now. Used to be resistance. I like this one. This is a good one. Let's put up a couple of major moving averages. See if any of those come in play that we can lean on. Right here, a little bit on that 50-day right at $54. I would key off of that. The stock's at 55.67 with 2 or 3 weeks till expiration. You should be able to get a decent credit for that. I like it. That's the process. That's how you go through and use the scanner to find bullish put spread opportunities. I'm going to show you another feature that I use. I like it as well. And I'm going to put that option liquidity back up. And then I'm going to take off this earnings projected date and the pre-earnings bull. And I'm going to look for a capitulation. And I'm going to remove the compression. Now we'll go into engulfing. Now we should see quite a few results here. There are a few. This bullish engulfing pattern is it's a very widely used technical indicator, and it's a really good one that indicates the stock might be ready to reverse. So Boeing was one that came up, and you can see how this candle yesterday completely engulfed, hence the name, engulfing, completely engulfed this candle. And that is usually a sign that this stock is going to move higher. And look what we have here, a nice horizontal support level right there. The 100-day is a little bit far away, but this is nice right in here, this 320 level. We can key off of that. I would want to see the stock continue a little bit higher this morning, and that would confirm that this is a good candle to lean on. So I would go into option pricing, and I'd be looking at that 320 level I think we were mentioning was attractive to us. Scroll down, take a look. So we got the 320, 317.50, and let's say that you can get maybe 660 here, and maybe you can buy that one for $6. You can only get a 60-cent credit on this, so I'd like to see a little bit more than that, and a little bit more would help. But on a 2.5 point spread, I put up 250 minus 60. I've got to put $1.90 up to make 60 cents. That's still an excellent return. That is probably about a 28% return, and that's in a matter of 3 weeks. You can see that I've got a lot of good things working to make sure that this spread has every chance to succeed. I've got this horizontal support level that I'm leaning on right here. I've got all this negative pressure on the stock, yet it's been able to hold up pretty well recently. Got another major moving average down here, and I've got that bullish engulfing candle right here, and I'll be waiting for a little bit of follow through here to tell me that this stock does want to move higher. So that was using the engulfing pattern in conjunction with a couple of other technical indicators. You can also go in, maybe you didn't have an engulfing pattern on a daily, but you might be able to find one on a 4-hour or maybe on a 3-hour candle. And you can look at those results as well. A capitulation is similar to an engulfing, and sometimes they happen in tandem. But the capitulation, I'm looking for a new relative low and for the stock to reverse sharply off of that low. And GLD, let's take a look at it, see what we've got here. So we've got the new relative low right here, and then we had the stock bouncing off of that relative low and closing above the prior candle. Plus you've got major support here at the 124 level. That's where that 100-day moving average is. This sets up pretty well. You've got support there using the bottom of that candle. You've got a bullish pattern right here, and you've got support right here. Gold is strong, or it's pretty neutral relative to the market. This might not be a bad bullish put spread on gold keying off of this level right here. We'll take a look and see if there are any other capitulations that we can find. I like using that all the time. I scan to see what might possibly be coming up. And I also should qualify this video recording by saying that the market has been down the last week. So for me to find this particular pattern in this market right now, a little bit difficult. So we've gone to the H2 and we see that ABBV had a capitulation. So I'm going to move to H2 time frame. We'll see if we can visually pick up that capitulation, and then we'll look at so there you go. There's your relative low and the stock bouncing back up. And now I want to see follow through on this H2. This is all good stuff right here, but I want to see follow through, and I'd like to see the stock above this resistance level right here. And if it is, then I know I've got a really decent low that I can trade off of. And now I'll want to zoom out and see if there's anything on a daily chart. Yes, there's a 50-day moving average that I can be leaning on, and that's probably what the stock bounced off of. You can see it's fairly neutral relative to the market. I'd like to see strength versus the market, not quite getting it in this case. So this one would be okay, but not overly crazy about it. This breakout and this support level is something I would lean on, that 108 level. So if the stock pulled back a little bit farther, I'd feel even better about leaning on this. So that's your lesson on how to find bullish put spreads and how to use some of the different criteria in the scanner to do so. And once you find a search that you like, you click save, and then it will appear in my searches. Just make sure that you name it. Maybe you even want to name it bullish put spread and then have a little qualifier, compression or bearish climax or engulfing, so that you know what that search does. And then you can also have a description of it so that when you're looking through a number of different searches, you can click on it and know instantly what went into that search. I'll be posting more searches on how to use the scanner for buying options and for other strategies as well. Thank you.